Hey everyone, welcome to Wealth Redefined. I'm your host, Michael Reynolds, certified financial planner and owner of Elevation Financial. Thanks for joining me today. As always, really glad you're here. Today we're going to talk about ESG investing defined, a beginner's guide to this. It occurred to me that I've talked a lot about ESG investing over the months and years I've been doing this, but I never really, or at least I shouldn't say never, but I don't think I've really put together just a basic beginner guide to kind of what it is, or at least not in a more complete form like I'm going to do today. So what I'd like to do today is simply to define ESG investing and kind of walk through just a beginner's guide to what it's all about, what it means, some various aspects of it, and just kind of give you an overview of ESG investing in general as a definition. So let's jump in. So as the world becomes more increasingly conscious of our impact of our actions on things like the environment, our society, many people are looking for ways to align their investments with their values. They're looking to align their money with making an impact in the world. And one way to do this is through ESG investing. So first, let me say that investing is a nuanced and sometimes really complex space. Values and impact investing and ESG investing is no exception. The space is filled with jargon, lots of confusing terminology that can cause lots of, confusion. And additionally, ESG has become politicized, which only adds to the complexity and the issues and the problems. So let's try to cut through some of the noise today and cover the basics of ESG and discuss at a high level of what it is and how it can apply to your investments. So first, what is ESG? ESG stands for Environmental, Social, and Governance. It refers to a set of criteria that investors use to evaluate a company's overall impact on the environment, society, and corporate governance. So ESG investing takes into account not just the company's financial performance, but also its impact on people and the planet. So companies that prioritize ESG principles are more likely to have a positive impact on society and the environment, which can lead to long-term sustainable growth as well. So ESG investing involves analyzing a company's ESG performance and integrating that analysis into investment decisions. So this means looking at a company's environmental impact, such as carbon emissions, waste management practice, as well as social impacts, such as labor practices and community engagement, governance factors, such as board diversity, executive compensation. All these things are considered. In recent years, ESG investing has become increasingly popular because more investors, are looking to align their investment with their values. This has led to an increase in demand for ESG investments, which has in turn driven the growth of the ESG investing industry. So why is ESG investing important? So ESG investing is important for several reasons. For one, it allows investors to align their investments with their values and have a positive impact on society and the environment. So by investing in companies that prioritize ESG principles, investors can support these companies that are working toward a more sustainable future. In addition to that, ESG investing can also provide some financial benefits. So companies that prioritize ESG principles may be more likely to have a long-term sustainable growth trajectory, which can lead to better financial performance over time. There's a lot of nuance here, a lot of controversy, a lot of unprovable claims here. So I'm not saying that by default ESG means better performance, but there is evidence, there's data, there's notion to believe that if logically a company has ESG principles integrated into its operations, sometimes in some cases that can lead to better performance overall. So I want to be careful. This is not a settled debate or anything. But also, and more importantly, ESG investing can also help investors identify potential risks and opportunities that might not be reflected in traditional financial analysis. Example, let's consider the Deepwater Horizon oil spill in 2010. That's an ESG risk factor we can analyze. So first, there was environmental risk. The Deepwater Horizon was one of the most significant environmental disasters in our history, leading to massive pollution in the Gulf of Mexico. This resulted in extensive damage to marine life, wildlife habitats, as well as fishing and tourism industries. So a lot of environmental risk there. Social risk. The spill affected the health and livelihoods of people in the surrounding communities. Many fishermen and workers in related industries lost their jobs, causing a significant social impact. Additionally, health issues linked to the cleanup efforts emerged, creating further social harm. The governance risk, the G part of it. This incident also highlighted governance issues at BP. Prior to the event, BP had a history of safety issues. The disaster raised questions about the effectiveness of its risk management policies and procedures. And the subsequent investigations, financial penalties, and damage to the reputation are all tied to governance risks. So, these risks and failure to manage them appropriately had substantial financial and reputational impact on the company. So this example illustrates the potential material impact of ESG factors on a company's performance and why it's important for companies to identify, assess, and manage these ESG risks. So I want to pause here and just say that ESG sort of gets a bad rap as being some far left liberal agenda that is for hippies and tree huggers and environmental activists, and a lot of times conservative sides or even moderates will just kind of write it off as just this progressive liberal agenda. But in reality, ESG does align with some of that, but ESG is also meant to reduce risk. So ESG principles can help a company reduce risk that can in turn reduce the impact or the probability they will have some sort of financial risk tied to that. Again, this BP example is a great illustration of that. So ESG is not necessarily just some left-wing agenda. It's meant to be somewhat of an integrative approach to not only having a positive impact on the planet and society, but also having a positive impact on productivity and entrepreneurship and innovation and the companies that generate the performance and the returns and the profits. So it's very integrated. And if we cut through the politicized noise and look at it with this lens, I think we can remove some of that political filter and commentary and noise that doesn't really make a lot of sense all the time. So finally, ESG does and can help drive positive change. By investing in companies that prioritize ESG principles, you can send a message to companies that you value sustainability, you value social responsibility. This can incentivize companies to improve their ESG performance and work toward a more sustainable future. And again, I want to pause here again and just say that, if you think ESG is just some liberal agenda, there's something for everybody when it comes to ESG principles. Let's say you're a far left environmentalist. Great. That aligns perfectly. But let's say you are a Christian conservative. I'm just going to hypothetically, a lot of major religions, I would say most, if not all major religions on our planet, prioritize taking care of the earth, being a good steward of the resources we have available to us. That aligns perfectly with the positive impact of environmental ESG principles. So, you can find ways to attack ESG and politicize it, but the reality is these are principles that pretty much all of us can get behind when you strip the noise away. So let's talk about the growth of ESG investing. ESG investing has grown significantly, especially in recent years. So in 2019, global sustainable investment assets reached $30.7 trillion. I said that poorly. Basically $30 trillion, up from $22 trillion in 2016. And this growth has been driven by a number of factors, including increased awareness of the impact of climate change, growing consumer demand for sustainable products and services, and the increased availability of ESG data. And one of the key drivers of ESG investing growth has been the rise of passive ESG investing. Passive ESG funds track ESG indexes and invest in companies that meet certain ESG criteria. And this approach has made it easier for investors to incorporate ESG principles into their portfolios without having to conduct their own ESG analysis. So another factor driving ESG investing growth is the increased availability of ESG data. So as more companies report on their ESG performance, investors have access to more information that can help them make more informed investment decisions. So this has led to the development of ESG ratings and rankings, which provide investors with a standardized way to evaluate a company's ESG performance. So let's apply this. ESG investing strategies. So there are several ESG investing strategies that investors can use to incorporate ESG principles into their portfolios. These strategies can include negative screening. So this involves excluding companies that don't meet certain ESG criteria from an investment portfolio. For example, an investor might choose to exclude companies that have a poor environmental track record or maybe engage in unethical business practices. That would be a negative screen. You exclude those companies. There's also positive screening. This involves selecting companies that meet certain ESG criteria for investment. So, for example, an investor may choose to invest in companies that prioritize renewable energy or have a diverse board of directors. There's ESG integration. This involves incorporating ESG analysis into traditional financial analysis to make investment decisions. So this approach considers both financial and non-financial factors when evaluating a company's potential for long-term sustainable growth. And then impact investing. This involves investing in companies or funds that have specific social or environmental impact. So for example, an investor might choose to invest in a fund that supports renewable energy projects or provide funding for underserved communities. So if you're confused at this point by all these strategies, don't worry. There are ways to kind of bypass all of this deep work, and we're going to talk about that shortly. So these are just some examples of the strategic approach to incorporating ESG into investing. So let's talk about some key ESG metrics and factors. So when evaluating a company's ESG performance, there are several key metrics and factors to consider. So these include the environmental metrics, like things like carbon emissions, energy efficiency, waste management, water management, biodiversity. We also look at social metrics, things like labor practices, human rights, diversity and inclusion, community engagement, product safety, and government metrics, governance metrics, the G part of the equation, board diversity, executive compensation, shareholder rights, anti-corruption policies, ethics and compliance. So again, I want to pause here because I'm really amped up about this politicized landscape we have around ESG, because so much of it is just labeled as liberal left-wing agenda and gets written off by so many people because they align it with politics. It is not politics, in my opinion. Environmental, social, and governance metrics. So let's look at environmental, for example. Okay, who's against lower carbon emissions? Who's against energy efficiency? Who's against better waste and water management? Who's against just taking care of the planet in general? I mean, can we get behind this? This is not a political thing, right? Social metrics. Is anybody against treating workers well, treating workers fairly, having, diversity and inclusion policies? Not necessarily, political left-wing caricatures, but real, true diversity and inclusion policies that make sure we treat each other with respect in the workplace. Who's against community engagement? Who's against product safety? And these are all things that we can get behind. Same thing with governance. Who's against diverse boards? Including all voices and making sure we have a rich tapestry of different environmental and diverse types of individuals on boards. Who's against limiting executive compensation to be reasonable? Who's against anti-corruption? Who's against ethics and compliance? I mean, again, we can argue nuances, but in general, the spirit of ESG is something that I think most of us can get behind. So let's talk ESG investing versus traditional investing. So ESG investing differs from traditional investing in several ways. While traditional investing focuses primarily on financial performance, ESG investing takes into account a company's impact on the environment, on society, and corporate governance. This means that ESG investors might choose to invest in companies that prioritize sustainability and social responsibility, even if those companies may not have the highest financial returns in the short term. So ESG investing also involves a different approach to risk management. Traditional investing may focus primarily on financial risks, such as market volatility or credit risk. ESG investing, on the other hand, may also consider non-financial risks, such as reputational risk or regulatory risk. So finally, ESG investing can also provide investors with a way to diversify their portfolio. So by investing in companies that prioritize ESG principles, investors can gain exposure to industries and sectors that may not be represented in traditional investment portfolios. So diversity and diversification is also an effect of ESG, or can be an effect, I should say. So let's talk about ESG investing opportunities. How do you do this? How do you do ESG investing in your investments? So there's several ways to incorporate ESG investing into your financial plan. These include, first, ESG mutual funds and ETFs. ESG mutual funds and ETFs. ETF stands for Exchange Traded Fund, which is similar to a mutual fund. They're basically both kind of baskets of stocks and or bonds that give you a broad, diversified way to invest in a broad spectrum of a portion of the market. So these are the primary and the most popular ways to incorporate ESG. And this is primarily what I do with my clients as well. These are investment vehicles that invest in companies that meet certain ESG criteria. The funds might use negative screening, positive screening, ESG integration, or impact investing strategies to select those investments. So the availability and the popularity of these mutual funds and ETFs really continues to grow and is making ESG investing more accessible than ever. So, you can find ESG ETFs and mutual funds for just about any cause you can think of, for any kind of factor, any kind of tilt, a lot of variety there. So the space has really matured quite a bit. There's also green bonds. Green bonds are debt securities that are issued to fund environmentally friendly projects. These are projects that might include renewable energy infrastructure, sustainable agriculture, or water conservation projects. There's community investing. Community investing involves investing in funds or projects that support underserved communities. These investments might focus on affordable housing, for example, community development, or microfinancing. And there's impact investing funds as well. So impact investing funds focused on investing in companies or projects that have specific social or environmental impact. These investments can include renewable energy projects, sustainable agriculture, healthcare initiatives. So in general, you can go very deep into this, but the majority of the time, it's ESG mutual funds and ETFs where most people find the most convenient and useful way to incorporate ESG. So how do you get started? So when you're getting started, if you're interested in getting started with ESG investing, there are some tips to get you started. First, define your values. Before you start investing, it's important to define your values and determine what kind of impact you want to have with your investments. So this will help you identify which ESG factors are most important to you and guide your investment decisions. Now, I'll pause here and say that, when you're defining your values, for the most part, ESG is really centered around these E, S, and G values: environmental positive impact, social values, social justice and social inclusion, and governance, which is ethics, compliance, board responsibility. So that's generally what we see. However, you can find very specific thematic investments that are aligned with very specific values. So for example, let's say you are a far right conservative politically, and you believe in certain conservative values. Yet you can find funds that align with those values. I would say they're not the norm. They're not necessarily the mainstream, but you can find that. Or let's say you're a vegan. There's mutual funds and ETFs that are for vegans. They basically invest in companies that are vegan friendly. So you can find, funds for wind energy, for water conservation. You can get very, very specific. But this also becomes kind of a rabbit hole, and it's not always the most productive way. So you've got to balance the alignment of values with sound investment allocation, asset allocation, and investment principles. So keep that in mind as you're exploring this. So again, next, research those investments. There are many investment opportunities in the ESG space. So do your research, find the ones that align properly with your values with the right balance. And, you can use a lot of screening tools out there to do research. Evaluate performance. Make sure you look at the track record and performance of these funds and various investment vehicles. So, evaluate not only the values, but the performance, the longevity of the fund. All sorts of factors go into play. Look at your risk tolerance as well. So ESG investments, like any investment, carry risks. Look at your risk tolerance, make sure they align properly with your risk tolerance, and then monitor your investments. Make sure they're kept up to date. Make sure they continue to align with your values and your investment goals. So this may involve reviewing ESG performance metrics over time, staying up to date on any news or developments related to your investments, making sure they align with your stage of life and your risk tolerance, any changes in life. So if you'd like a more in-depth overview of getting started with ESG investing, including how to select investments, there's a webinar on my YouTube channel called How to Evaluate and Select Socially Responsible Investments. You can find it by going to my website, elevationfinancial.com, scroll to the bottom, click on the YouTube icon. You'll find it there on my channel. So let's talk ESG investing challenges and risks. So ESG investing offers a lot of benefits, but it's not without challenges and risks. Some of the key challenges and the risks of ESG investing can include, first, limited ESG data. So while ESG data is becoming more widely available, there's still a lack of standardized ESG reporting. So this can make it difficult for investors to compare ESG performance across different companies and sectors sometimes. There's greenwashing. Greenwashing refers to the practice of companies making false or exaggerated claims about their environmental or social impact. And this can really make it difficult for investors to accurately evaluate a company's ESG performance. I won't name any names here, but you're likely noticing that many big name financial institutions are putting the ESG label on their funds in an effort to follow this trend. However, there are lots of established but lesser known funds that have been built on a foundation of ESG from the start. So do your research. Higher fees. ESG investments may sometimes carry higher fees than traditional investments, which can impact investment returns. So this is a trade-off that many investors are comfortable with because of the alignment of ESG values. So just be aware that, certain ESG funds may often have higher fees. Now, when you look at returns net of fees, often you find they're very comparable. But even so, fees are a concern. You just have to evaluate how important is it to pay the lowest fee possible versus having an impact. So just weigh that against your priorities. Occasionally, you can find limited diversification. So ESG investments can be concentrated in certain industries sometimes or sectors, and that can limit diversification. So be aware of that. There sometimes can be performance trade-offs. Again, this is nuanced and not a settled debate by any means, but the data is inconclusive, but investing in companies that prioritize ESG principles may sometimes result in lower financial returns in the short term, although there is evidence to suggest that ESG investments can provide, better long-term financial performance. So again, not a settled debate. Just be aware that that is a factor. And ultimately, there's no guarantee that ESG investments will perform better or worse than their traditional counterparts. My goal is to always strive for comparable performance. So ultimately, to wrap things up, ESG investing really offers a great way for investors to align investments with your values and have a positive impact on society and the environment. And so, by incorporating ESG analysis into investment decisions or, incorporating ESG funds into your portfolio, you can support companies that prioritize sustainability and social responsibility, which potentially can lead to long-term sustainable growth comparable to traditional investments, but also with the impact you desire and the impact you're focused on. So what is the real impact? While the question is sometimes, kind of controversial, there is evidence to suggest that ESG investing does make a difference in the world. There's some additional data that cuts through the noise and delivers the facts about ESG, and it's called 10 Things to Know About ESG and Sustainable Investing, and it's from USSIF, which is the Sustainable Investment Forum. And that's at esgtruths.com. And you can find it there for more information. So, while ESG investing does offer many benefits, it's important to do your research, consider potential risks and challenges before you make a decision. But obviously, I'm a fan. That's something I specialize in. With careful planning and evaluation, ESG investing can really be a powerful way to create positive change and achieve your investment goals at the same time. So that has been an overview, hopefully for beginners, of ESG investing, defined what it is, and some of the ins and outs. So with that, I'm always happy to chat about this or anything else that's on your mind. So please feel free to reach out. My website is elevationfinancial.com, and you can reach out through my contact form there or book a complimentary money session right there on the website if you would like to chat. So with that, again, website, elevationfinancial.com. Find me there. Thanks for joining me today, as always. Have a great day. We'll see you next time.